the next topic for us is pivot points. Let's understand what is a pivot point. So a pivot point is generally the best price for a stock for the next day or the next time period, depending on your time frame which you have chosen. It is the best price, which means what? It means it is the average price around which the stock should stay. Now, I'm sure you all will be very, very excited. If you have no idea about pivot points, you will be very, very excited to test this out. And as I said, today is a completely practical oriented class, no theory. Okay. So I'm going to show you the concept of pivot point first. Okay. And then I'm going to come back to the PPT. So please see what exactly do we mean by the pivot point. So suppose today's open, high, low, and close data is there with us, and I'm talking about a daily chart. Okay. Now, thank God that we know all of this, that I don't need to wreck my brain over all of that, that what is a daily chart, what is OHLC, that all of that base is clear. That's why we are here today. So I told you that open is never something, I'm never an important point. This is something I never really want to take, right? High, low, and close. Let's talk about high, low, and close. Okay. Now, don't you think that whatever is the average traded price today, even though we can take that from the exchange, if I really want to see that if the stock went up, it went down, it closed here, or finally it closed here, let's take the average of these three, which is called the HLC3. Okay. And let's make it a benchmark, isn't it? Right? If a team has scored 200 runs in 10 overs, you know the run rate is 20. And based on this, what will you do? You will imagine or understand or expect that in the 11th over, the cricket team, the same team, will score around 20 runs. Now, if the team scores 25 runs in the next over, it means it is moving above its average, which is great. If it scores 16 and then next day it scores 14, it means the average is invaded through. So the momentum is going down, isn't it? So the high, low, and close divide by 3 acts as a benchmark price for the stock in the next time frame. If I'm taking a daily time frame, it becomes the average price for the next day. Okay. This high, low, and close divide by 3 is actually called the pivot point. It's called the pivot point, the average point, the best point for the stock next day. Next day, if the stock is above its pivot, it's trading above its pivot, it means it's bullish. Next day, if the stock opened above its pivot, but it's now trading below its pivot, this is the pivot point, then it is bearish. Till the stock stays above its pivot, remember, you can always go for a bullish trade. And watch out, if the stock goes down its pivot, it's now entering into a bearish zone. So, sir, is this the only pivot point you wanted to teach? No. By calculating pivot point and then focusing on the highs and lows, which means the trading range of today's day, I can calculate a few supports and a few resistance levels from the pivot and the highs and low of the previous day. Basically, adding and subtracting a few things to the pivot in a formula, I can calculate 3 resistance or even more than that and 3 supports for the stock, which means this is the average. Obviously, this is the average. Now, if a stock is moving between the first resistance and its average pivot point, it's moving like this, it's supposedly it will have a resistance in this area and it will fall below, and then when it goes down, it can actually go below pivot point also. But if instead of that it went up, then it's due to approach R2, and then even if it is possible, it can also approach R3. These are 3 resistances. If this is broken, this will also be broken. This may be broken. This is the next target for you. And then this is again the next target for you. Again, when I'm talking about this point, this point, this point, what are these? These are support 1, support 2, and support 3. So if a stock has fallen below its pivot, it will take some peace or sanctity around its support and it will get a support and it will go up. But if it doesn't, then it is due to a reach and approach support 2 very soon. If it does not even stop here, it is due to reach support 3. Basically, these supports and resistances calculated from the pivot points help us to trade and take buying and selling decisions. Now, I'm going to show you the formula of pivot. Actually, pivot formula I've already shown, but I'm going to now show you the formulas of resistances and supports from the pivot point. Once you know this, you will start calculating it and then putting horizontal lines on the chart, right? No, sir. We are in the 21st century. Where are you? These concepts and these calculations were important 50 years before. Today, you all have softwares which can calculate pivots and resistances and supports and plot that on the graph for you to see. Okay, it's all ready to eat, cook, fully cooked meat, and you just need to microwave it and it's ready. Okay, so the pivot point is a technical analysis indicator. Why? Because obviously you know the definition of a technical indicator. It is a series of price data. It is a series of data points, calculated by applying a formula on the price data. So we are also applying a formula on the price data of high, low, and close, right? And that formula is the pivot point. That's why it's a technical indicator. Okay.